Have you ever been approached by a founder who had already given away, say, more than 50% of their business? And what was that like for you?
It's an automatic no, unless it was for a buyout.
When you did exit, how much did you get bought out for with the company?
The total sale value was about 8 figures.
Do you think that there is a negative connotation attached to capitalism?
That's what I sense. There have been a number of companies where I thought it was really great, and then they just couldn't keep it going.
Welcome to Behind the Redwood Curtain. How are you today?
Doing good. It's been a long day. I've had a lot of meetings, so this is a nice way to seal the deal.
Awesome.
For Tuesdays.
Yeah, so after we read your bio, we like to ask you a couple of questions about your background and kind of dive in between these lines here. So the first question is, you were you graduated with a BA in Economics and Legal Analysis at Mills College. Did your education at Mills College help you advance your career?
That is a good question. It did. Yeah, and one of the reasons was the classes were great, the academic piece, but I did a lot of extracurricular stuff that actually I think is the way that I learned best and what really prepared me for work. So I did an internship with Mayor Willie Brown in San Francisco and his Office of Protocol, and I interned for Mary Hughes, who runs a political consulting firm, and she backed some really cool Nancy Pelosi's first campaign, and Kamala Harris.
Nice.
What else did I do? I worked a lot. I had 2 jobs. So balancing all of that, I think, is the skill set that's fundamentally helped me in being an entrepreneur later on.
That's cool. Yeah.
Yeah, when I was in school, I was in a lot of extracurriculars, clubs, and internships and other activities. And I think that was a big way to really leverage your tuition into employment opportunity.
100%.
And I think it's really great. So you were did some different internships. What was your favorite extracurricular activity while you were attending Mills College?
Good question. Okay. There were a couple that stand out. One was I got to be on the judicial board.
Cool. Nice.
So ethics violations, there's a student governance and that you can go through sort of a jury of your peers versus going straight to the administration. That was fun. I thought I was going to be a lawyer, so that's why I did that. And my internship for Mayor Willie Brown was really cool. That was my freshman year. Then I came back the second semester, and Willie Brown invited me to go to Shanghai, China with him. He was doing a trade mission. So San Francisco and Shanghai are sister cities, and they were doing a 300-person trip of San Francisco business and civic leaders going all the way to Shanghai to broker deals. And so I got to lead a bus full of folks from San Francisco around Shanghai for 2 weeks. And it was my first time in mainland China. I got to see the Pearl Tower and see how some of that stuff works, know? And this was 2002.
Whoa.
Ages ago. Shanghai looks totally different. But that was the start of kind of thinking of myself as a business person versus a lawyer.
When, that was the deciding factor for you to be I don't want to be a lawyer anymore. I want to be an entrepreneur.
It was definitely the difference between helping people sort through and fighting about things versus building things. And so I sort of had that clarity based on that experience. It was really hard, but really fun.
That's awesome. Yeah. A lot of people enter higher education and they have an idea of what they want to do and what they want to be. And as their journey progresses, that changes, and that changes through experience. And so, I want to ask a little bit about this college degree, and I want to ask if it was worth it. Is the college degree still worth it today? Do you recommend young folks
go to college?
Yeah.
That's controversial. The numbers still speak for themselves in terms of the economic payback for an undergraduate education so far in the market today. The signaling effect that you have been selected, that you've done this training. So much about education is how much you're signaling like what you can do and that you can like follow rules and, make choices and think and be independent. But I do think that there are really, really important alternative tracks, which I fully support. I fully support gap years where you explore things and try experiments in career pathways that you're curious about before you pay down all of that money, which is serious these days. I do think that traditional education needs to be modernized in some really important ways to make it more worthwhile and make you more work ready. So kind of traditional liberal arts, lectures and papers and things. For the practical world of like STEAM jobs, in entrepreneurship and business and finance, there's different ways to get there.
Do you think that, how do I frame this? The fact that the fact that the schools haven't modernized, is that on purpose to hold back people in being successful in life?
Ooh, that's a conspiracy theory. I don't know.
I've been thinking about it a lot because like a core GE doesn't teach you how to stay away from debt, how to manage your finances, how to budget, et cetera. So like for the conspiracy theory aspect, like, do you think that's on purpose to hold you back?
I mean, I think if you're feeling cynical, it might be in some cases, or rather the lack of education in some communities, or the poor, the access to equitable education in some communities, may be structural reflection of inequity, which I think is a reflection of something that's intentional. Power and comes with education and entrepreneurship too. What I do think systemically is the bigger problem is that it's really hard to change. Really, really hard. I think it's about 85% of children are in public school systems. The funding model is so complex. It's hard to change a huge ecosystem that big. One of the largest employers in the United States is the education system and the government. And then there's private sector, which is like Walmart. But if you're talking about public sector, that's a lot of human bodies that are tied to systems and policies that have been going on since the Industrial Revolution.
Yeah.
So to change that is not easy. And I've tried through ed tech.
Yeah, because like, where am I going with this? Like, since there are so many people and the system has been going this how it is right now since the 1800s when the Industrial Revolution started, you can't just flip a switch and it's changed, because then that would have to introduce like new ideals and new training. So it'd be like probably trillions of dollars the way the government spends their money, trillions of dollars trying to implement the new system.
Yeah.
So
what I've been drawn to are organizations that are kind of at the fringes that are trying new things in new ways in pockets. Because part of it, I think, is that you have to be able to see something that actually is different and then see that it works, to have the fear of something going wrong with our children being implemented en masse. Right. So I've the kinds of schools that I've invested in are like alternative models and hybrid online, offline, and all kinds of things. They happen in different pockets. And that is important to have as a model. Like, for example, with Tesla, the first Model T, the first car that he built was like that super race car, right? It was like $1.5 million each or something like that, crazy. And he had to build that to make it look cool, because electric cars were not cool at the time.
yeah.
And then he built the like boring sedan, right? If he started with that, that wouldn't have caught the attention and gotten people excited about what's possible. He had to break that mindset. And I think that's what some education entrepreneurs are trying to do.
Okay, so like private schools, they go off like on their own set of rules, right?
Charter schools too.
Oh yeah, charter schools. So like if those charter schools and private schools say instead of teaching like math or something, for example, they would teach like finance, which kind of has a math aspect to it. But if they tailored it more to like budgeting and staying out of debt and like why debt could be good or bad for you depending on what you do, they can do that. They can implement that. Oh, okay.
There's charter schools that you write your own path, you write your own charter, and you still have to submit it to the Board of Education and get approval. But yeah, and then you get the public funding too. The money follows the child. So wherever the child goes, that's why it's a bit controversial with charter schools, is that parents are like, you're taking money away from public schools.
Oh, really?
Yeah. And anyway, there's a whole political aspect to it.
Yeah.
But what I would say is it's important to have the free market be able to encourage entrepreneurs, even in places like education and healthcare that are highly regulated, so that we can experiment with in kind of petri dishes and see what works and what doesn't, and then roll it out.
Okay.
That's my thinking.
So you're as an angel investor, you really have to gamble a little bit. You have to make educated assumptions, and you have to hope that this business takes off. Is there something? Was there a business that you maybe invested in and it didn't do so?
Oh, heck yeah.
And why was that?
What a switch of topics here.
Yes, although I see where you're going. I mean, in some of those education startups, they didn't work, right? Because it is really hard to change, and because the pressures that they faced from financial investors, like pure financial investors who just want returns, was too high. So there's a world of private investors that focus on transactions and financial returns. And there's a world of impact investors that want to put their money in, and it's kind of like a different form of philanthropy. They still want to see returns, but they're more patient with returns, and maybe they have a longer timeline for returns, slightly lower. It's not 10x, it's 2x, you know. I am a financial investor with a certain set of values that I follow. And that's how I think about it for myself.
So, with those two sort of investment models, one where you're really prioritizing profits and growth and return. And then there's this other model where, those things are important, but there's also this, community service or something good that's being done, philanthropy, behind that investment. But there's still somewhat of a return.
Yes.
Which of those categories do you feel like you fall in? Maybe somewhere in the middle?
I'm somewhere in the middle.
Somewhere in the middle?
There's a whole spectrum.
That's what I was going to guess. You don't want to put yourself in one, I would say that most people are probably in the middle.
Yeah.
Which side do you feel like you're gravitating more towards these days, and
good
why?
Question. I think that when I started angel investing, meaning like small checks to early stage companies, I didn't quite know what I was doing. I was kind of learning by doing, and I met these entrepreneurs. I fell in love with their idea. I fell in love with the founders, and I wasn't as good as at the diligence part of it, and understanding the stages of what it takes to build a tech team and a product and go to market. And so I was more idealistic. And that era of my angel investment career has more failure. More recently, I've been kind of very balanced. So I'm investing in funds and companies that are financial returns. Like I can see that evidence of it, and it's aligned with my values. So I would never invest in something that feels predatory or I feel like does damage to people in some way or society in general. Like I'm hoping that the companies I invest in, they're genuinely things that I want to see in the world.
What was your transition from entrepreneurship into being on the flip side of that, investing? What was that? What did that look like?
Yeah. Not expected. I was in Taiwan doing a Fulbright, and I was doing like teaching and stuff like that.
And what's the year on that?
That was 2005 to 2006.
Okay.
And that trip, I met a couple of entrepreneurs based in Beijing, and we started this education company. It was bootstrapped, so we didn't have investors. I didn't even know what VC was, literally, at the time. They brought me on to help write the curriculum, recruit teachers, train them, sell, kind of be the front lines with parents and customers. And that company just ended up growing like crazy for the next 5 years. We sold that business. It was 5.5 years of absolutely grueling, like crazy hard stuff, a lot of mistakes, a lot of stuff I did not know what I was doing, but I just did it, and we figured things out or not. When we had the unexpected exit, I was like, wow, I have money. I've never had that feeling in my life, right?
If you don't mind, when you did exit, how much did you get bought out for with the company, and how much of that was yours comparatively to your partners?
Okay. Can I give you a range?
Yeah, we don't actually,
Yeah, it was. The total sale value was about 8 figures, and we were split 3 ways.
Awesome.
Congratulations.
Congratulations.
That's
Yeah.
huge.
And so did you, over those 5 years, did you accept any payouts, any wages, or did you just stick it out?
Blood, sweat, and tears.
Wow, really?
No, we had like very modest salaries. I mean, we paid some of the people on our staff 2 or 3 times more than we were paying ourselves, for sure. And we were working a lot.
And, by taking a smaller salary and, taking that sacrifice, were you able to reinvest more into the business? And
Yeah.
did that ultimately benefit you when you sold?
That is correct. I mean, we were trying to be very operationally efficient. It was not a tech-enabled business, right? So it's not like we build a product and then you reap the rewards and the margins start to increase because you only have to build it once, the main thing, right? And you add it. This was a service-based business, so it was a lot of human bodies, a lot of boots on the ground sales, physical offices. It was expensive infrastructure. And in order to grow, we had to do whatever we can to open that next office, hire that next person who can manage 50 more clients,
Yeah. We had a previous guest on, and he was saying, because he wants to go from 8 figures to 9 figures. That's $1 million to 10 million, right?
Mm-hmm.
Okay, yeah. So he's trying to do that. And he said whatever he's paying himself would have to go right back into the business. So say he's paying himself $250,000 a year. He would have to put that $250,000 into somebody who has those skill sets to bring the company up to that next level, because you can only do so much from 0 to $1 million.
Yes.
Or you can only do so much from 0 to $1 million. So going $1 million to 10 million, you're going to need to hop on rice and beans and rice. I don't know why I'm stuttering so much, but yeah. So that's what he's working on right now.
I can imagine.
Yeah.
I mean, any enterprise, any leader of any company or even nonprofit, in order to grow, has to figure out how to get stuff done through others.
Yeah.
There's no way around it. I mean, it may be fewer people now with AI, but still.
I was going to ask you, since you were working in China, right? What is the business scene like out in China comparative to the U.S.?
I haven't been back in a while, like since before the pandemic. So I'm sure things are shifting all the time because it's so dynamic. But it is a ruthlessly capitalistic society.
Aren't they communists?
Yes.
How does that work if you're communist government but capitalist
Exactly.
people, right?
How does that work? I mean, it is one of the largest economies in the world, right? And some really gigantic brands come out of there, more and more. When I got there, I was pretty early in my career. I had been working for this nonprofit, opening up charter schools. So I was all California friendly with everybody, and you just don't do that in Shanghai. I learned to become more of a shark because you have to. And my business partners definitely knew how to do that. They'd grown up there and whatnot. So I learned a lot from them. And I think you have good relationships with government officials. But actually, in some ways, that's true here in the United States too, right? In order to do business, you lobby, maybe there's more structured ways of doing it, but it's still true.
Interesting. So you kind of have to, I guess, like play the villain to make it.
You have to, it's very competitive.
Yeah.
It is really tough to retain great talent. And at the same time, the time we entered the market with the product we had, it was the right timing. If I went back and did the same business, it would not work anymore. It's just over. So we got lucky in that part.
Ladies and gentlemen, this episode is sponsored by AAA Productions, a Humboldt County video production company helping businesses create strategic, professional video content. If you've been wanting to start making video to grow your socials but don't know where to begin, AAA Production offers consultation and customized production packages to help you build a sustainable content strategy. Use the links below to get started today. Thank you, and back to the show.
The year is 2026.
Yeah.
And China, it depends what metrics you're using to calculate this, has surpassed the United States as the largest economy in the world, depending on what metrics you're using to make that statement. And you mentioned how competitive the workforce is there.
Yeah.
And I took Mandarin in high school.
You
and
did?
I did.
Oh, cool.
As an Asian American, I'm able to experience the American side, but then when I, learn about the Asian side, I find out that I'm a bit lazy compared to, a lot of my, cousins and I find that it's going to be difficult for the United States to compete against China, Korea, Japan, where they work twice as hard for twice as many hours. And
much less.
I like to think that I'm a hard worker, but then when I learn about their culture, I realize that I'm like not that hard of a worker. How can we in the United States compete against that? And can we in the first place?
I mean, that's a really good question. Can we? Do we want to? Do we have to in some cases? Because there's the whole culture of, I think it's called 996 or something like that, where it's like, how hard can you work and how long? There are so many more humans to compete with that and the educational system always ranks you, even in an elementary school. Your classes, you're the number one student. So there's always that way of thinking. Is that for the better or worse? I don't know. I personally wouldn't put my kids through that system. I would want them to think about collaboration and project-based learning so that they can be prepared to be that kind of worker in the future. Creative. Not that Chinese people are not creative at all, but it's just a different system that you grow up in. And now I think with AI taking care of so much that's rote and repetitive, you need more creative thinkers and out-of-the-box thinkers than ever. One thing that's really interesting about that kind of immigrant mentality, there's the Chinese competitive market for sure, but then you come here to the United States with that work ethic. There's a reason why half of the billionaires in the United States are immigrants. It's because the structural system doesn't necessarily work in corporate America, so they pave their own way. And that is the fastest way to personal wealth is, I think it's entrepreneurship. Anyway, I'm blabbing.
No, that's good.
We got
we
really
like
off
that.
topic.
Yeah, we did.
You said a lot of great stuff there, and we're gonna have fun with making the clips because a lot of great stuff there, and that actually leads me into kind of our script here.
Yeah.
When did you begin your journey as an angel investor? What was that first check and that first business that you invested in?
That's a good one. It was while I sold my company in 2006. I went to grad school for a year because I did not know what I was going to do next. I really did.
And this was Harvard.
Right, yeah. So I studied, I don't know, policy, education.
I have international and comparative education.
I think that's the thing. But basically, you take whatever classes you want.
Awesome. Sounds fun to me.
Exactly. And then I took a very 9-to-5 job afterwards because I was pretty burnt out from that first company. That job put me on the Stanford campus in the business school in 2013 amidst all of the craziness of startup stuff. And then I started to learn about it. And I was like, oh, what is all of this? What's happening? Every student that I was working with was talking about, do I go to take this consulting or finance banking job, or do I go do this company and work at this weird startup called Google? And, some of them did. So yeah, that's how I started thinking about it. And then I started to help companies out that were starting in the education space. One of the companies I helped out, I joined later on full time. I really drank their Kool-Aid. And then along the way, there were a couple of others that I kind of started to just get really excited about the founder and what they were building. One of them is called Matthegon. This was 2016, I think, that I met Philip. He's like a engineer at Google, part-time. He was building this really cool interactive curriculum on math. It was amazing. I joined his board, helped him fundraise, and he sold his company in 2019 for like $10 million.
Oh, and you invested in that?
Yeah, it was talk about a great return for 3.5 years of work, right?
Yeah. Yeah. How does the investment model work? You put in money, you get a share of the company, and you get dividends. And then if you exit, or if the owner of that company you invested in exits, what's that like? What's the payment structure like?
Okay,
if
good
you
question.
Were to invest?
We could go down a whole rabbit hole of startup investing. I actually didn't invest in Matthegon, but I was an advisor, so I had kind of other benefits from that.
What payout structure do you prefer when you're investing? What do you because I know there's a lot of different ways you can do it.
Yeah.
What way do you prefer?
So what typically happens, I invest in early stage. So I would say pre-seed, seed, which means that you've got a product, maybe, or maybe you have the vision of the product. Maybe you have some sales, but they're pilots. So it's not like you have clear recurring revenue. So I come in really early and I take a big swing, because there's not a lot of evidence yet of the solid business. Some people come in strictly at A, B when there's full revenue, a customer, there's renewal proof and all of that. Usually I invest via something called a SAFE or a convertible note, which means that I'm buying a certain percentage of the company at a certain valuation, and I'm booking that, paying for that, and then when the company goes and raises 2 future rounds, or maybe they get bought, then we split up the revenue based on who is on the cap table, who's on the investor list, basically, and by percentages of ownership. So
if you buy in, say the valuation of a company that you're buying into is $1 million.
Yeah.
And you buy 10%, so 100,000. I'm bad at math. 100,000. You do a Series A round, right?
That would be like 2-3 years later or more.
And then the valuation is $10 million. And then Series A, $10 million. And then somebody wants to buy the company at that price, $10 million. Do you get $1 million for that?
I would get 10%, depending on whether or not they raised other rounds in between after me. They probably did to get there, or the kind of shares that you buy. Because there's also different kinds of shares. There's common shares, there's preferred shares. It starts getting really complicated. But yes, in theory, if I invested at $1 million and they just grew like bonkers and didn't raise any more money, and they suddenly got an offer to get bought out for 10, Theoretically, I would have 10% of the returns. Yes.
Okay. So yeah, that whole rabbit hole seems like a podcast by itself.
Yeah.
Because I'm super curious about that. But
About the dynamics of investing. Yeah,
Yeah.
in startups versus investing in traditional businesses. Like, I would say the difference between a small business and a startup is growth rate. Like, if you've got a restaurant or a retail shop and you grow 20, 30% year over year, that's good, right? Because it's so much more capital to operate that business. The margins are different. But startups, the difference is that they use technology to scale, and so they're expecting venture scalable returns. So if you're not growing 200, 300, or 2 to 3x year over year, there's something problematic because you should be built for scale. And that's the biggest difference between like small business / medium business or traditional business versus like tech-enabled startups. Yeah,
And so,
different.
so yeah, you're in this investment world. Is portfolio income your main source of income these days at the personal level? I mean, for example, it's not my main source. My main source is my salary job.
Yeah.
But for you, it's probably looking a lot different. Tell me a little bit about that.
I mean, right now, my life, I would say, is 1/3 investing and about, I would say, 25% investing in startups and in funds where the deferred, that money comes in 7-10 years. So it's out of mind. But I do help those portfolio companies. About 50% is advising startups. So it's a way of me still being in the weeds and operating and building without actually starting another company because I'm too old for that.
Yeah, there's no risk there. You're just getting paid to help out.
I'm getting paid to help out. In some cases, I'm earning it through equity and I'm not getting paid.
Okay.
That's one way to do
so you
it.
get paid out in dividends?
Not dividends, in shares.
shares,
in equity. So I might get like 0.1%, for having a call with the founder a couple of days a week or
That's
something.
cool. And I'm sure it makes you even more, not that you wouldn't be getting paid cash, but it probably makes you more invested emotionally and personally because you're like, I want to see this take off so that my shares go crazy.
Yeah, I do. I mean, in a lot of cases, I just really believe in the founder and they need it. Yeah. They're on their own. It's very hard to do.
Totally. And, as a business owner, founder, starting a business like that, it can be very lonely.
Yeah.
And it can be difficult when things are lonely and you don't have somebody to lean on. And if you are looking for somebody to help support you and guide you through your business, and you don't want to pay for it because that can be expensive, come on down to the Small Business Development Center. We can hook you up with a free business advisor, and they can help you with whatever you're looking to get help with, and they can support you, be there to guide you, be somebody to lean on, and ultimately just support you through your entrepreneurial journey. So yeah, go down to your local SBDC. We have free advising and consulting. We'd love to help you out. Back to the show.
Great plug.
Can we play a game real quick?
Yeah.
Sure.
Okay. So my business is AAA Productions. It's video production, doing social media and commercial stuff for local businesses. Can we walk through, say I was talking to you as like a potential investor.
Yeah.
Can you ask me questions on like what would make you invest?
Oh,
Kinda
like a
go
mock
through-
investor call?
Yeah, I wanna see
I
what
like
that's
this
like.
idea. Yeah.
I've always wanted to know what this is like.
Okay. I mean, first of all, this would be a small business investment. It would be because it's a service-based firm, right?
Yes.
Okay. And I would have seen your pitch deck
Okay, so I would have to show you what this Okay.
or walk me through it.
Okay.
I'd want to see what the market size is. I would want to understand the big problem that you're solving, what your solution is and your secret sauce to that solution, what traction you have, why you, and what you would use with the money.
Okay. Well, right now in this case, I would already lose because I have an idea of that, but I would have to, from the last time I did that, I would have to go back and like figure that out again.
Yeah.
But would I have to like give you, like, say we're past that, would I have to give you like my yearly revenue? right now?
That's a good question. I mean, for some investors on the startup world, they like want to dig in. It really varies to the kind of investor that you have. Maybe if you're getting an investment from a bank or a more financially driven investor, they'd want to see like quarterly investor reports and stuff like that, or even monthly. I get lots of investor updates every month from various startups. It's just like a progress report, and it's sort of like, how is business? What's working? What's not? How much cash flow do you have? Do you need to raise more money? what are the dynamics? What do tariffs, how do they impact your business? All that stuff.
Okay, so first year, I'm going to bleep all this out. First year, I lost.
That's fair.
Second year, I lost.
Uh-huh.
This past year, 2025, I think I would have done like maybe
In profit?
gross.
Gross revenue.
I don't know what that would like
Okay.
profit-wise.
Cool.
Yeah,
So that is how many customers paying what?
last year. I'm going to say 6 people paying any. Oh, dude, I don't know because my prices are like
Varied.
so varied.
Yeah.
Like, okay, let's just go with my hourly rate of.
Okay. And each project is maybe 10, 15 hours? Or it really varies?
It varies so hard. Yeah, because like I would sign with a client and like during the summer we were doing 50 hours a week. And then before that we were doing like 20 hours a week.
So
and
it's
then,
seasonal.
Yeah, and then after the summer, it would be like 12 hours a week.
Okay.
So yeah.
Yeah. So I think what I would do if I were advising you, I would, I'm happy to talk later.
Yeah, 100%.
I think that what you need is some clear ICPs, like ideal customer profiles, some like 3 or 4 products that are standardized with standardized pricing. And if you have 6 happy customers from 2025, that's your marketing.
Okay.
Yeah, because this is a small community. And if they are, the first thing that you would do is go out and get testimonials from them and write up case studies and have that ready to ship and then build a sales funnel. And then you get your list of like from the SBDC perhaps or the Chamber of Commerce, you get a list of all companies that fit your profile, which is that they are interested in social media or they attract a Gen Z population or whatever. They'd be a good fit for you. Maybe they map to some of the companies you've already served well and have good case studies. I'd pick them out, build a list of 100, take those case studies and collateral and go down, sale. Call each one, email it, visit each one.
Okay.
Give them a CD or like email them a link to all your case studies, that kind of thing.
So I can go to you and ask you for a client list that fits.
I don't know if they do that. You do
I
that.
can't do that with the SBDC, but the chamber has a public directory, I think, with chamber members who like want to be on this directory so that people can find them. So I can give you get in contact with the chamber and just each of the chambers and yeah.
There you go.
Okay, yeah. Okay. So then I can grow that 6 to 12 or 100 or something like that.
I would say a really good target is you want to build out like a very loose back of the envelope budget. So let's say that you did at least I don't know, 100 hours. So you're building 6 customers times 2,000, let's just say that, right? 18K. So you want to get to a point where you can, I would say, triple this.
To get you to invest or?
Depends.
Okay.
Yeah, it depends on what I get for that, right?
Okay, yeah.
How much of the business do I own? How much direction do I help you with? At what point? Because really with small businesses, we don't see an exit potential necessarily, right? So then you would have to return based on dollars, right? So then you could pay through revenue. It's a different model.
And that's something you negotiate, and that's what they do in Shark Tank. So you'll be like, okay, I'm going to give you 50% of my business, and then you're going to invest X amount of money. And then she might come back and be like, okay, I'll give you that money, but you said 50%, I want 75. And then you're like, well, I only want to give it, and then you have that negotiation. Maybe you meet in the middle. And that's what I see on Shark Tank, and that's what I can imagine it goes.
What I imagine you doing is you don't need investors.
Yeah, I was gonna say, but like in the case of this scenario,
Yeah.
let's say I was doing 30 grand a year for 5 years or so.
Yeah.
Like 30 grand. And that was Dan. He was on
the panel, the leadership
yeah,
panel.
and him and John Ballard were our fourth
interview.
episode,
Oh,
yeah.
that must have been
They founded LCV.
Yes,
Yeah.
Lost Coast. Yes.
But say I was doing 30 grand a year after implementing this. So 2026 did 30 grand, 2027 did 50, 2028, now we're at 75 grand.
Yeah.
And then I come to you and I'm like, here's all this information, here's what I did,
Yeah.
here's my pitch. What would
I say?
Yeah, or like invest?
What would I say? I would say, why are you asking for money? You're doing something that works. Just do more of it and faster.
Okay.
And what I would say is, now that you have recurring revenue that over at least 3 or 4 years, now you go get a line of credit from a bank and you don't have to give up ownership of your company. All the proceeds you keep. You only want to raise money if you truly need it to build something. And technology is expensive to build, but this service is really selling yourself. And if you get to the point where you're doubling and growing by 30, 40% every year, keep doing it. But if you wanted to do it faster, if you wanted to build a tech-enabled product, then there'd be something to invest in.
Okay, interesting. Okay, so
I recommend, so my first company was bootstrapped. I recommend not getting investors unless you have to.
And what would a target, industry be for an investor? Technology?
I think technology for the venture stuff, things that can grow like double, triple, 10x year over year. So things that where once you build the thing, you can sell a lot of, For like service-based businesses, I'm working with a couple of clients like that run like consulting firms or administrative offerings. You can easily hit $1 million in revenue. If you started to be able to do social media, and what if you started to offer it to all kinds of, maybe your target audience is restaurants around the world. You don't have to stay in the Humboldt area. You can be here and operate here, but you can serve a lot of other people.
Okay, interesting. I appreciate that. Yeah, that was a fun game.
I like that. And I'm going to take that for a lot of my clients I have here at the SBDC. And you said like, if you don't need investors, don't go looking for one, and just keep doing what you're doing more and faster. Yeah. And like that, I like that. That's like kind of what I want to say to a lot of my clients, but I'm afraid to. But like that's actually what I need to tell them is just keep doing what you're doing, but more and faster.
Yeah, and if you have like a clear roadmap where you want to like triple in size, and the gap to get there does require some dollars, there's also, I would say, a mixed capital strategy, which is, are there grants? Is there credit? Are there other loans that you can get?
Business competitions.
There's business competitions, yes, apply. Where you don't have to give up a percentage of your company.
I like that.
If you don't have to.
Definitely.
So would you prefer someone getting a line of credit over having an investor come on and taking a portion of your business?
I think it really depends. Really depends on the business. Like in some cases you need the capital.
Yeah.
Because of what you're building and what you're trying to do. In many cases though, I think entrepreneurs don't necessarily have to do that. Especially I would say in a service-based business. I think you could easily hit 100K this year if you wanted to.
Okay. I'll be trying to do that.
So I have a question. It's and it might be shifting gears here.
Sure.
We can
But
shift,
I do really want to get it in here. Is what brought you to Humboldt County?
Oh.
When did you
okay.
move here? What brought you here, and how do you like it?
Yeah, I love it. I moved here mostly full time in 2021. So a little bit kind of in the midst of the pandemic. I had lived in the Bay Area for a long time and then off and on with other cities. And I was kind of getting burnt out with all of the craziness in the Bay Area.
Totally.
My mother already lived up here and my brother, and so we would come up here all the time anyway for the holidays. And I was like, okay, well, I'm just gonna go.
Spend more time with the
and
family.
then stay. And I ended up staying.
It's definitely
I love
cheaper
it.
out here.
Yeah, and I love the trees and the clean air. I love that I can now start to understand like who, meet more people in the community. It was tough to do that in the first few years. I still have to go to the Bay Area once a month, but I'm like rushing back now.
Totally.
Can I ask what part of the Bay you're from?
Yeah, I lived in San Francisco in my 20s, between that and Shanghai and Singapore, and then I lived in Oakland for a lot of the rest of that time.
I'm from San Jose.
Oh, cool.
Yeah. I lived in San Jose. I grew up there.
Yeah.
Moved up here for college.
Mm-hmm.
And at first, I didn't like this place at all. And then I started meeting great people. And now I'm like, I don't want to leave.
It's one of those places that really grows on you, right?
Yeah.
I didn't think it would happen, but it totally did.
I think that's the common story for everybody is like
That
they're not-
transplants?
they're not so sure about Humboldt County, but then once they get into the scenes and stuff and kind of figure
Yeah.
out where they relate to, and then they build those connections, and then they just want to stay, and that's where I fall in.
Totally.
So,
Yeah. I was in the limbo for a little while, and then I was like, oh, okay. I would go to the Bay Area, go to Palo Alto, San Francisco for a week for work. Couldn't wait to get home.
Yeah, yeah, it's nightmarish out there.
It's awesome that you're out here, and it's great that this place did grow on you, and you did make that change because you got introduced to
You too.
Startup Humboldt.
Yeah.
Tell me about your introduction to Startup Humboldt and how you ended up being a panel speaker at our event.
Kind of by accident. I saw a flyer at an ice cream shop that I go to like way too much.
What ice cream shop? Cool. I'll have to check it out.
Is
Yeah.
that the one by
Yes,
Yes,
exactly.
Did
Did you put that flyer up?
No.
I don't know.
I
Probably
saw
Tomas.
the flyer there.
Yeah, I saw that. I was like, what? There's a startup competition? I need to be part of this. This
I'm
is
so glad
like
you are.
so my jam. And then I just stopped by one day and someone gave me a tour. And they let my dog come in with me, and that was really nice. So I was
that's
like,
cool.
okay, I'm gonna just call everybody. So I proceeded in the next week to hassle Will and the Lost Coast guys and everyone else, and then now I'm like roped into a bunch of things.
Yeah. I remember meeting you and talking to you. I thought you were from the Bay Area and traveled up here because they invited you out.
Oh.
And because you really remind me of someone from the Bay Area. So not in like a bad way.
The places you hate.
So I was like, oh, like she seems like really cool and like full of knowledge. So like I want to talk to her more and try and get her on the podcast since we just started. Like at the time when we approached you, I don't even think we launched yet at the time.
cool.
'Cause I think we met December 2nd. We didn't launch till the 4th.
Okay,
Yeah, so
got
we were
it.
still,
Wasn't
like-
even,
Yeah, we were still filming.
you were pre-seed.
Yeah. Yeah, so it was really cool. And the fact that you're up here, I think you are and can be once more people know about you. You could be a huge resource.
I
to a
hope
lot of
so.
people,
That is truly my desire is to do that, especially in this community. It's super exciting to be able to do that.
I think a community like this needs people like you, Dan, John, Startup Humboldt, the whole thing. So it's really awesome that you're here.
Thank you.
We appreciate
That's so
you being
nice.
here. And so, now that you're here, you're in Humboldt, you've seen what's going on around town. You're involved here with the space.
Yeah.
and you're a founder, you're a leader. What would make Humboldt a realistic place for founder and leaders to stay long term?
That is a really good question. I think about that actually quite a bit, about like what would make my friends come up here and move and buy a place.
I think that same thing.
And I try to entice them. Part of it is that they don't know what a gem this place is from the surface without coming and spending some time. And even when you come here, you have to like spend some time and dig in a little bit and be patient about it. I think some of the infrastructure stuff is the stuff that would attract a lot more families. I think Startup Humboldt is one of the things that is really going to help move the needle for more younger people to come for school and then stay and then build more resources. I think once they just get out into the woods and by the ocean, it's a no-brainer.
That's what got me. Hello, everybody. I'm Luke Kennedy, building manager at Startup Humboldt. Behind the Redwood Curtain is recorded and produced at Startup Humboldt. Startup Humboldt is a co-working space mentorship hub for entrepreneurs building real businesses here on the North Coast. You can learn more at startuphumboldt.com.
What about economically? Because I know the economy out here has been like kind of tanking a little bit, and Startup Humboldt is kind of here to bring that back up. So we have like another green rush, but entrepreneurial wise. So what do you think
Is needed?
Yeah, economically to bring more people up here?
That's a good question. I mean, I think some of the quality things, like for my friends who have kids, would be like really great schools, really great healthcare. But I think overall for startups to thrive, there's a world in which like building out the kind of hustle and mindset without sacrificing Humboldt values, right? That you care about nature, you care about community, you live in a small town, so you therefore are a good neighbor, that you don't lose that. Because there's a lot of anonymity in some of the bigger cities where you're building, like in New York or Silicon Valley. So that I think the seeds of what Startup Humboldt is doing is definitely the way to go. And then how do we do that like bigger and more? I think maybe a couple of accelerators that would be focused on local industries would be really interesting to attract a whole body of leaders and founders, maybe related to timber or fishery or sort of like climate-related startups. That would be so cool. So to be known for something like that, I think would help attract the first cohorts of people.
Now, Humboldt, we have an economy that is based on a few different things in the past, including timber, lumber, cannabis. Do you think that there is a negative connotation attached to capitalism here in Humboldt County? Do you think people are afraid to embrace commercialization because perhaps, in the past we've had timber, not sustainably harvested. We've had environmental issues that have threatened Humboldt County. Do you think it's created a scare? And do you think it has attached this negative connotation to commercialization?
That's what I sense. I mean, I wouldn't say I'm an expert in what's happening here or the vibe, because I'm still learning myself. But I do feel that. And I also feel that myself, just in general, with startups and, venture capital and business and tech. It's very like, you've got the pedigree, the right zip code, the right school degrees, you get funded way more often. That's the plain truth, and the numbers speak for themselves. I think it's still like 2 or 3% of startups that are female founded get venture funding.
Wow.
It's in the single digits. So there's something really off about a lot of this, right? So in some ways, I really think Humboldt has that kind of mentality for good reason, based on history. And I also think there's an opportunity to shift. And not be afraid of it, but how do you own it and change it?
I said in the last podcast where we were on this conversation about cannabis and timber and whatever else used to be up here. And when they all failed, if you read in between those lines, is entrepreneurialism. So shining a light behind what made the cannabis industry so thriving and what made the timber industry rise was entrepreneurialism. So shining a light on entrepreneurs, lift them up, start a bunch of businesses. And like, I think that's why Startup Humboldt is so great and what I think will create the next economic boom in Humboldt County is entrepreneurialism. That's just my opinion though, but I can see that.
I can see that too. I could totally see that. There's so many businesses that operate in a hybrid remote fashion these days. So you don't have to give up the quality of life that you get here and nature and clean air and stuff and that small town feel. You don't have to give that up in exchange for, growth and revenue. Those can coexist.
Yeah, because if we go like an LA route or New York route, like the skies are going to be like constantly gray, or you're going to see smog around everything.
It's also so expensive.
Yeah, exactly, and hiking prices. So I think if we play our cards right and stick to our guns, because we didn't do that with cannabis, like making this like a cannabis destination or whatever. Like if we play our cards right, then we will be able to reap the benefits of growth and revenue and trees and clean air and
yes,
beautiful
100%.
beaches. Yeah,
everybody wants that. They just feel like they can't access that. I have a friend of mine who said you should start a very, very luxury resort up there because it's so beautiful. He came up here and loved like Lost Coast, the brewery.
Oh yeah.
And he was like, yeah, you should have a super high end where you helicopter in people, or I don't know. It was, I think there's a lot of desire for this kind of space.
Yeah, there is a lot of tourism up here in the summer months because there's Oyster Fest. Have you ever been to an Oyster Fest? I haven't
been to that one.
It's good. You should go. Me and my girlfriend went for the first time last year. Really
super
good.
Fun.
Yeah, so I recommend that this year for you. Lots
of fun. Yeah. You might catch me pouring beers. I often volunteer every year to pour beers there. So come to Oyster Festival, summertime event. Lots of fun.
Maybe you two need to start a media company together because you're very good at plugging things, and you're
This is it.
This is it.
We actually we really want to scale up this podcast viewership wise, so that we can open ourselves up to like plugs and sponsors. And if you have a product or service that you want to sponsor on our podcast, reach out to us, Andrew or I, Behind the Redwood Curtain podcast. We'd love to sponsor you. So,
love it.
What do early founders most get wrong about building something that lasts?
Oh, gosh, that's a good question. There are, I'd say, in my experience, there are kind of two buckets of things that lots of founders either spend a lot of time, energy, or money on that they may not have to. One is making bad hires. And two is raising too much money or too little money.
What's the problem with raising a lot of money? Does that tank your, like how much of the business the owner ends up owning because they're giving away so much to investors? Is that how that works?
Yes, that's part of it, is they raise a lot of money, which puts them on a clock. And the VCs are wanting to meet their goals, which is their job, is to ensure that their investments get to a certain range and they get to write up their check, right? So it puts the valuation really high, which means that the metrics and traction have to be really high, and they may not be ready for that. They may, it's sort of unrealistic expectations. So they set themselves up to really struggle and fail and not truly experiment and build and listen to the customer in the way that they need to.
Yeah, because they're on the clock, as you were saying, to get the investors paid back. Have you ever been approached by a founder who had already given away, say, more than 50% of their business? And what was that like for you to either...
It's an automatic no. They're way too leveraged.
Did you learn that the hard way, or did you ever go into a company where, say, they only own 49% and you were like, I want another 15?
No, I have not done that. The reason is that I think for a company that's so early and then so leveraged, they don't have any power to really make decisions. It means that they have raised too much and have not produced too little. I mean, usually, once you raise, you got to build these metrics and then you go and raise again and keep going. But yeah, there's been one or two companies that fit that profile, and I've volunteered to help, but I wouldn't make it an investment because it's not financially sound.
Interesting.
Unless it was for a buyout.
Oh yeah.
So when you're making investments and you're coaching, overseeing a potential opportunity, what behavior change do you see most unlock better results?
Ooh, that's a good one. A lot of the coaching that I do is really based on scaling yourself as quickly as your business needs to scale. So the kind of founder that you are when it's just you by yourself and your first 5 customers is really different from the kind of founder you need to be when you have product market fit and you are now kind of trying to retain customers or open new markets. So they are founders that adapt and grow as fast as their company is internally within themselves in terms of their skill set. And they're learning more about who and what to hire, when, and they're learning about how to manage their cash. They're, listening to the customers and building the right product features and releasing quick, product updates all the time. So I would say that's the number one thing that's interesting.
Somebody who can adapt, somebody who can grow with their business.
Yeah.
Do you ever see somebody that isn't able to do that?
Oh, yeah.
And what happens to them?
They die. The company dies. Yeah.
What was one company in like a growing industry or like a profitable industry, kind of like technology, that they had all of the accolades or like all of the spirit needed to invest, but they just fumbled?
I mean, I've certainly seen a number of startups and seen a number of pitches where there were some really great things, but not all the boxes that I needed to be ticked were ticked, and so I passed. And that happens a lot, right? There have been a number of companies where I thought it was really great, and then they just couldn't keep it going. They couldn't sell fast enough. They didn't see enough opportunities and turn them into revenue quickly. They made bad hires and they wasted a lot of cash and time, and they couldn't catch up.
And what industry are those predominantly in?
It really depends. I've seen that happen in a couple of spaces. One in logistics, one in healthcare, which is tough. One in like professional development training.
Interesting. None in tech, or
They're all tech enabled.
Tech. Okay.
Yeah.
Nice. Okay, that's a question I had. What's the real difference between an angel investor and a venture capitalist?
Really big difference. I'm both, or kind of. So an angel investor invests from their own pockets, and they make the decision themselves. They tend to write smaller checks, sometimes not, depending on what's going on, and they invest directly, like through an SPV, like through an angel syndicate, for example, like a group of angels invest together, or just directly with the founder. They sometimes have diligence, they sometimes don't, in terms of like the investigation and deep dive into the financials. But a venture fund is a group of professional investors who raise money from other people called limited partners, and they are stewards of that capital. They go and run a whole process, they have a thesis, they have like an expected return, and it's just professionalized private investing.
Okay, so If you were investing in somebody as a venture capitalist, what is your expected return? Do you set that price yourself, or does the fund that you're working with have a expected return?
Okay, so I am a limited partner to a couple of funds where I've written checks to teams of professional investors who go and do proper research, and they have a thesis. And they've got kind of a portfolio of companies, they have track records. Some of these fund managers are people who started out as angels and they had a really good track record, and they said, oh, okay, I'm really good at this, I'm going to do this, but I want to do more, and I'm going to raise a fund and go do this with 50 million versus just my own, pockets of cash. The funds that I choose to invest in are ones that have great metrics on returns, meaning that their companies have been marked up and gone through later stages of funding. They're companies that I think are really cool. Their values aligned. I trust the fund managers. I think they're smart. I think they do their homework. And, there's kind of metrics about how you measure the success of a venture fund too. But my angel portfolio, I haven't really done an updated evaluation or analysis of that because I've made a bunch of small checks, so I need to go back and regroup. I've got like 50 or so companies.
Damn, nice.
Yeah.
What
many of them have failed.
can I ask you, what is the smallest or first investment you've ever made for like dollar wise, and what's the most you've ever invested into a business?
Yeah. I have invested as little as a couple thousand in a company. And usually that was because it was through an angel syndicate. So it was a group of angels who pooled our money together, and then we put that lump sum into the company.
So like 5 of you put 2,000 in?
Yeah.
Okay.
Yeah, something like that. Some founders raise that way because it makes sense. It's the best strategy. The largest investment I've made is as an LP into a fund. So the professional investors who go and do their own thing, and they do this all day. I'm distracted and do a bunch of other things. Is in the mid 6 figures, upper 7 figures.
Whoa, really?
Yeah.
Like you personally wrote a check and that goes into a fund?
Mm-hmm.
Oh, and then do you get a return on that? Or is that
Yeah.
okay.
Yeah.
I was going to say, is that like a donation or?
No.
Okay. Yeah.
No, sir.
So if you put in $200,000,
Yeah.
you expect to get back $1 million?
Maybe. Yeah, or nothing.
Really?
Yeah.
So it's kind of...
It's a gamble.
Big risk.
Oh.
Yeah. The truth is, you only do this if you're willing to risk it. You want to put all your money into ETFs and mutual funds first and give yourself a foundation, and then you can play.
Okay, so to put in $500,000, say.
Into a fund.
Yeah, into a fund. You would have to have had the knowledge prior, right? Like a projected revenue and like their sales pitch or pitch deck or whatever.
Yeah.
And be like, okay, I'm going to put in this $500,000. And then in your head, you're like, I want to make like $1.5 million back, right? But that...
It could
like,
happen.
if everything looks great, you could make 1.5 minimum or whatever back.
Potentially.
Yeah. Or you can get like $100,000 back. Right?
Yeah.
Okay.
Correct. Or I could get just the cash back in return. I don't know. Who knows, right?
That's scary.
Yeah, it is. I mean, making an LP investment is a different ballgame. Like those folks who are running those funds, the good ones, it is a lot of work and it's not easy. It's a startup in and of itself. They're managing a portfolio of maybe for 50 million, they're investing in X number of startups, and they save a couple tens of millions for follow-on investments to support the winners of that pool and double down on them for the next round. So yeah, it's a tough job.
Interesting. Yeah, that's scary. It's kind of like playing with your money at a casino.
There's a little more data.
It's more data backed.
Investment is it's educated gambling.
Yeah.
It's educated. Yeah, there's a fair amount of risk and luck, but there's also a lot of data that you can evaluate. It is definitely riskier than things like real estate or stocks in the public markets with companies that are already really big and stable and have a brand, that kind of thing.
So if this investment world was the casino, and you went in with a rather small amount of money from the start, and you walked out with a large amount of money, I can imagine when you left the casino. Looking back at your journey as an investor, and the fruits of all the labor that you've put into it, did you ever imagine yourself making that money through investing when you started? Or did you see yourself making that money, or is it a surprise to you?
I mean, when I first started my career, I had no idea what I was doing. I joined a consulting firm first out of undergrad. I felt like my soul was dying from the inside. Then I joined a nonprofit. I really loved that and fell in love with kind of having impact. And I didn't know how to reconcile the two. Like, I thought I had to choose one or the other. And then it felt like there was, through this the first company I started, I could combine the two. I could make money, but also have impact on kids. And that felt really cool. Then I just continued to do that, even with my private investments. And that's what I continue to do today. Even though I'm a very staunch capitalist, I think you can still do it with a soul. And you can still have ethics and values. In fact, I think it's vital.
that big win that you walked out of the casino with, it wasn't just financial gain. It was, it was the lives you changed, the entrepreneurs you supported, and so I like that. There's more than the money to gain from investment.
Absolutely, for me, that's super important. It's just not enough to be in it for money, the dollars. That's why I really didn't like kind of strict M&A management consulting. I was like, I feel nothing, and I hate all these people.
It's just robotic.
Yeah.
I mean, not entirely true, but yeah, I think you have to have both.
I got one last question
Sure.
before we move into our rapid fire. But before that, do you have anything you want to?
That's it. That's it for me. I think I do want to get to these rapid fires, so go ahead.
Okay. How has your coaching evolved as technologies and markets have changed, especially with AI and remote work?
Oh, that's so cool. I can work wherever, which is awesome. That's the benefit of remote work and using a lot of AI tools. My assistants, one of them lives in the Philippines, one of them lives in Spain. And we just do what we need to do, right? And we can serve customers, clients of mine all over the world. And that's not possible without all of this, like the tech stack that I have, know?
Yeah.
I love that. Yeah. And I can just bring my laptop and it comes with me. It's really amazing.
That actually gives me a question.
Yeah.
I grew up watching The Office, the TV show.
Yeah.
And one of the interesting kind of underlying dynamics of that show is that they're constantly having to compete with the bigger retailers.
Yes.
And they have to constantly justify their job and their office and the overhead that comes with that.
Yeah.
And they're always talking about how these bigger retailers are undercutting them because they don't have to pay for salesmen and rent and all these things. And so it makes me think, with innovation, with technology, with AI, with COVID, with the lockdown, with people working remote.
Yeah.
Do you think that the office is a dying world? Do you think that people are going to move away from the office workplace and more into remote positions?
I think the truth is that people want hybrid. We figured out that we can do a lot remotely, and so we love that freedom, but we also are human beings and we need to be in community. And that's the reason why I have to go to these in-person conference. I'm going to one next week because you still have to connect and like have casual conversations and enjoy each other's company. It's just human nature.
I like my holiday parties. They're fun.
Yeah, exactly. And you also need time to like go run errands and have the flexibility to work when you want. So I think it's a hybrid world.
I like that.
Yeah, I agree with that. When COVID happened, that's kind of when it all opened up, and then a lot of offices are like, oh, like everyone's taking too much advantage of the online, like stay at home. So they started requiring people to move back into the office like 4 days a week or whatever, 3 days a week. When in 2020 or 2021, it was the opposite. It was like 2 days or 3 days remote, 2 days in the
person.
office. Yeah.
Mm-hmm.
But yeah, let's get into the rapid fire round.
Okay.
True or false statements. There's 5 of them. Let's get into it. Early stage investments require more focus on the team than the product.
I would say that's true.
Founder resilience is more important than traction in the first year.
True.
Market timing can make or break a startup.
True.
The best lessons come from failures more than successes.
Not necessarily.
False.
I would say I have to go with false. Yeah, I would go with false.
Oh, interesting.
You need both.
Yeah. Active portfolio involvement is more valuable than having many companies.
What do you mean by that? You mean with my portfolio?
I would assume like being super active with like 4 companies
Okay.
instead of having
A whole
100.
bunch.
Yeah.
I'm at that stage where I can't be involved with many companies, and that's why I started investing at the fund level because they can, hopefully.
Yeah.
It depends on the kind of investor you are
Okay.
and what you want from it.
Okay. Yeah, it's I guess that question's kind of like, would you rather have 4 quarters or 100 pennies? Yeah. That's what I'm getting off of that.
I think generally I like to go deeper with founders versus superficial. So maybe I would say true.
Speaking of being like all over the place, would you ever work with a shark, like from Shark Tank?
Would I ever work with them?
Yeah, or like, would you ever? Have you met any of them? Have you?
I've not met any of them, but I've had a couple of founders pitch on Shark Tank and win. Actually, there are 3 and they all happened to get deals from Mark Cuban.
Really? Dang.
I did a project.
Wait, 2 were from Mark Cuban and 1 was from the bald guy.
Kevin O'Leary.
Kevin O'Leary. Yeah.
What were those businesses?
The most recent one is a company called ESAI. They're actually really phenomenal. They are a college admissions Gen Z career platform.
I saw that.
Did you?
I saw that episode.
The blonde woman?
I don't remember who was on, but I remember hearing something about like a Gen Z AI college thing.
And career platform.
That is so cool. You're a part of that?
Yeah, well, I'm a tiny part of it, but she is phenomenal. It's
that is so
really
cool.
Cool company.
Whoa, dang, yeah, that's crazy. Like the degree of separation, I think in the world is only like 6 or 9, or something like that. So like you know somebody who knows somebody who knows somebody who knows.
So kind of Mark Cuban.
Yeah, that's crazy. So. If you really wanted to get connected with Mark Cuban or Kevin O'Leary or whatever, you would just talk to that founder of the AI.
I don't know if I would. I don't know what I would want from Mark
You'd have
Cuban.
you'd have to have a good reason.
Yeah. Well, like if you really wanted to, like you could.
I mean, it would be super fun, Mark Cuban.
That's cool.
To work with your portfolio companies.
Wow. So say I came up to you one day, I'm like, I have this crazy idea, like I want to pitch it on, or like to Mark Cuban or something, like, can you get me in contact with him? Like you can probably get his email.
I would say probably not.
Probably not, really?
I don't know about that.
What I would do though is say like, I could help you prepare for Shark Tank.
Okay. All right. Well, yeah, that is everything we have.
Awesome.
Do you have any closing advice or final thoughts?
Closing advice if you're a founder. One piece of advice. Well, I think that you have to be open to change and open to growth to make it work, because it is so freaking hard. So make sure that you ask for help, accept the right kind of help, ask for advice, accept the right advice, but keep your eye on the ball. Very generic, but I think that's important. And if you need help, call me. I'm happy to help.
Awesome. Sweet.
Yeah, we'll link SK Lee's Calendly link
Sure.
in the description.
Sure.
It's on her LinkedIn. We'll also tag that. But yeah, that was another episode of Behind the Redwood Curtain. Thank you again, SK, for joining us.
Thank
That
you.
was awesome. Yeah,
This
I really
was super
appreciate
fun.
it. Yeah,
you
thanks.
guys are doing great.
Thank
Thank
you.
you.
Thanks for leading us down the rabbit hole of investing and then help
We might
plan.
have to dig into that formally.
Definitely.